Afternoon, everybody. My name is Anthony Lipschitz. I'm the Chief Strategy Officer for Thinking Capital, and
I'm Pat Forgione, CTO with Thinking Capital.
Thanks. So we're going to walk you through what we call lending as a service, which is our lending platform. But before we do that, I wanted to talk to you a little bit about the Canadian market. We are based in Montreal and Toronto, and the interesting thing about the Canadian market versus the US market is pretty much you've got 6 banks that represent 70% of the market up in Canada. So that leaves not a lot of room for competition. And if you look at the overall population, obviously, Canada's much smaller than the US. The concentration in terms of the business is in 4 provinces: Ontario, Quebec, BC, and Alberta. And the great thing, though, is that FinTech is really in its infancy in Canada. So a little bit about Thinking Capital. We started in 2006, and our mission really is a simple one. We want to transform the borrowing experience by providing Canadian small business owners with quick and easy financing to grow their business. So thus far, we have put out in excess of $400 million into the market. We primarily service small businesses. We've done about over 10,000 businesses, 3 million transactions, and have served multiple industries, primarily retail, retailers, restaurants, construction, as well as health and beauty. And some of our partners to date are one of those large banks that I mentioned, CIBC, Moneris, which is a large acquirer in Canada, Staples, Money Mart, and Shopify. So if we compare the lending gap between Canada and the US, obviously the population size is massive. We are not the 51st state that most people like to think we are. It is a separate country, I can assure you. We see that there's actually a pretty strong comparison between where people are borrowing. Debt financing, pretty comparable there. Term loan as an instrument, very comparable. Lines of credit. And the big difference, and this is really where the opportunity exists, is the borrowing from friends and family. In Canada, it's very, very prevalent, whereas in the US, it's less so, which tells us that there's less opportunities to access capital. Not everybody has that rich uncle, but not everybody wants to go to that rich uncle to get capital either. And if we look at the scores here in the US, obviously the FICO and the average borrower score in Canada, we use the Beacon score. So taking it back to our overall vision and what lending as a service is. So lending as a service is really about providing an outstanding user experience to our own customers and to our customers and to our partners' customers. Essentially, what we're doing is we're providing a technology platform for these businesses to offer customers the opportunity to borrow in their own environment. And obviously, everything is omni-channel today. Our technology can be accessed through multiple devices. And essentially, what we're trying to do and what we are doing pretty well at the moment is partner with as many great brands within the ecosystem. So as I mentioned earlier, when you take a lot of these brands that perhaps you wouldn't associate lending with directly, that aren't financial services in nature, they too recognize the opportunity to provide their customers with access to capital. And we're enabling that in multiple ways. So if we look at one partner in particular, our partnership with Staples, what we've done there is we've provided their users with exposure to the product in their own environment, on their website, on their mobile application. We're looking at rolling out in retail as well. And essentially what we've done is we've provided them with a white label version of our own technology and giving their customers the opportunity to apply directly through us. And we then service the funding and the account through the account's life cycle. So I'm going to hand things over to Pat, who's going to walk you through a few of the pieces in terms of the technology and how we enable that to happen.
Thank you. Given the context that what we're trying to do is simplify the process for someone to actually get money at the end of the day or for a small business to be able to interact, the goal from the beginning when we started was to democratize the application and make it very simple for partner platforms to integrate with us through APIs and whatnot, and ensure that it's always going to be something that we can keep in modules separately. So what we're looking at here is there's essentially 5 steps to this. There is the application process, which is essentially step 1 and step 2. Step 2 is where we're allowed to connect to data sources, and we're going to talk about that more on the next slide. Step 3 is where we actually calculate the cost of the lending. Step 4 is where we actually decision, and that's after looking at somebody's scoring and understanding what that paper is scored at. We can then give it a go or a no-go. And the last step is the actual funding, where we hopefully will deposit money into someone's account. The goal ultimately is to get all this done within a 24-hour cycle. The reality is that we can sometimes do it sooner, but oftentimes it takes longer than that for many different reasons. What we're looking at here is essentially a graphical representation of our software stack, and this is the meat of the application. So what we've done is we've broken it into 7 specific modules. The origination module is where the actual origination takes place. So is it an omni-channel application? Is it an API integration that we've worked through? Second step is all the different inputs that we can take in order to make a decision. So we've got all the accounting information. So connecting to small businesses, Sage Accounting connection, for example. This can all be done through our platform. And then we'll import all that data to use as one of the mechanisms to help us decide or decision the account. We've got bank information, all of their historical repayment information. So for any retailer or small business that transacts via PayPal or Plastic or anything like that, what we can do is we can import all those daily transactions into our system and use that also as an additional scoring mechanism. We currently support 2 distinct products. So we've got a term loan and an advance, if you will. That can be we can support at least 3 or 4 more different loan products in the future. Right now, this is what we focus on. So one is a cash advance product, one is a term loan product. Decisioning, we can actually score paper with a proprietary scoring mechanism that Thinking Capital designed and developed many years ago, where we score paper between a AA and an E class, but we also have the ability to score based on a partner's scoring mechanism. So we can actually modify how we score paper. And the reason for that is because it leads directly into how we fund, because we're able to support direct and indirect funding models. So we can easily be funding at 100% of the fund, but we can also share funding responsibility with a partner. So essentially what we can do is sum off book with a partner. We also have full facilities for servicing. So we do all the real-time monitoring of accounts in real time, essentially. So we know what's going on at any given time on any account. We do full in-house collections. So we've got all the mechanisms in place for a collections bureau. And all of this is all built within the Salesforce.com platform. It's completely modular, but runs, essentially our book of records is within the Salesforce.com application. And we also support multiple post-funding products and all the onboarding and decisioning. So all of this being built out as an API allows us to cut any one of these pieces away and either replace it or connect with a partner. So in the example that Anthony was discussing earlier with Staples, they essentially have white labeled our full application from end to end. But with other partners such as CIBC, we're actually doing a completely different model with them. And I'll talk a little bit about that right here with either the way we can brand things. You can go with a full white label, you can go co-branded, you can go with a powered by. But the reason this is important is because of privacy issues that financial institutions have. We all experience it, whether it's Canadian or US, we all have the same privacy issues. And many times, in order to score someone or to grade a paper, essentially, Thinking Capital needs all the financial information. And more often than not, one of our partners won't want to share that information with us. So what we've done is we've built in the ability for a partner to essentially host our technology in-house. It's fully API. It's very, very simple for them to connect to and use our decisioning engine. But what it allows us to do is circumvent the idea of sharing data. They're actually not sharing any information with us if they're hosting it themselves within their facilities or their data centers. So what that means now is it can be a complete white label that's actually hosted within their facilities. They'll have all the same abilities. So through origination and data sources, they can offer all the same products that we do. The decisioning, again, is either the Thinking Capital proprietary calculator decision, or it's one that's been modified to suit the partner portal. All the servicing can be done, again, through Thinking Capital or through our partner, whichever is easier. And the same goes for repeats and renewals. Ultimately, what the goal was for us to change or for us to pivot from simply a lending organization where we actually were on book 100% to someone that can now partner with a diverse group of clients to offer our services, and that's ultimately where we're headed. What we want to be able to do is allow any Canadian partner to be a lender, and it really should be transparent whether or not that lender is through Thinking Capital or proprietary and it's just a white label. So I think that more or less covers how we intend to break this down into pieces. 100% cloud-based. There is absolutely no in-house technology. Here you see a few of our partners. So we have full API connectivity to Square, PayPal, Sage, Equifax, and all the usual suspects. Our custom software stack is completely built in Apex, Visualforce, Java, your usual suspects there too. We're built fully on SQL and Postgres. We've got some of our SaaS partners up on the side here, so Marketo and Financial Force that we use, which is also a Salesforce partner. And ultimately, all of our ETL is done through Informatica, so it's industry standard, much easier for anyone to support and manage. And I think that pretty much covers our technology side. There was no goal here to bore you with JavaScripting, and that wasn't what we were trying to do. We just wanted to essentially show how we've modularized the software to be able to make any individual piece available to any of our clients. So with that, I'll let Anthony finish up.
Thanks, Pat. Yeah, so just to summarize essentially what we're trying to do, as the visual depicts there, is literally go to multiple partners, give them the opportunity to offer lending as a service. Here's your box. As Pat described, you can either host it in your environment, we can make it available to your customers through your own user experience. You can log in through your account portal with said partner, and we have pre-underwritten against your customer data and given the customer the opportunity to apply directly through us. That's the end goal. Currently, like I said before, we have multiple partners who are using white label solution, which is another variation that is working well for us. So thank you very much for your time. If you have any questions, Pat and I are certainly available after.